Okay, so I'm gonna redo this because unfortunately let me say, last time my audio didn't record, and so yes, I'm tweaking a little because my audio didn't record at all. Fucking piece of shit laptop. Anyways, this is bad debts and balance sheet is going to be not done right now. We're not doing this. I'm gonna make a separate video of it once I cool down. My brain is just completely fried right now because of how mad I am. Anyways, I'm just gonna quickly go as fast as I can. It's not gonna be in depth, unfortunately, like my original video, but I'm you just need to know this whole format. All right, you need to know this format. Discount allowed. This is the debit side. This is the credit side. Okay, so discount allowed is basically a discount that we are giving to someone else. Well, discount received is the discount to receiving. Okay, and you have to read this question. This is exercise 12.4. All right, so let's go to exercise 12.4. This is page number 170. Okay, so 12.4. Balance BD, because balance bought forward. This is going to be always in the debit side, and there's no discount allowed. There should not be a single X in any way, so this should not be next. Okay, and then there should be cash because we're putting cash and bank for the question. Then as Braga, it's all just the same. We're just putting in the values. What this discount allowed part is calculating is, say, as Braga. Okay, his price that we're going for is like the amount he's paying is $820. Okay, and we're giving a 5% discount. A 5% discount means we're taking like 5% multiplied with this. What value we get, we're going to subtract from this original value. Before that, I keep forgetting. Once you find the multiplication, the percentage value, you put that value in the discount allowed. Then what value you get, you subtract it from here. As you can see, as Braga, to a 5% of 820 is $41. So 41 minus 820 gives 779. This is basically done. And the credit side is anywhere where you have to buy, where you're buying something or you're receiving a discount from someone. It's the same thing. As for balancing, you have to first we start with, I think, better off. It's your choice what you want to start with. But if you start with either one, let's start with cash or something like that. But the cash the cash value you take on, you plus both side cash value, and see the one that is bigger. The one that is bigger you put as the total cash value on both sides, and take the next date, take it as balance CD. So then take the smaller one, subtract it from the bigger one. What value you get is your balance CD. Okay, and then for after that you basically just do the same for bank with balance CD, and what value you get, and for balance BD you just take the original values and put it there. That's basically it. Okay, I'm going to take a little break because of prayer. uh, okay, so now that you basically understood how this balancing and everything works, let's move on to the next topic, which is called petty cash book. Now in petty cash book, the format is as follows. Okay, well, this should be straight line. Wait, all you have to remember is the format. The format is just, oh my god, I'm actually gonna come. Okay, so receipts is basically your budget. After receipts is date, then bro, details, date details, and then is your total, and then it will mention which type of expenses, the extra expenses there are going to be, right? So like there is there's going to be like in the line there's going to be something like, I don't know, motor expenses or that expense. You put it under there. That's basically that. As for balance and restore, this is very important. So the how this works is, for if it's balance and restore, actually no, let's do restore and balance. What restoring is first finding the total here. then bringing that total here, and the addition of this total and the budget and the receipt amount gives us our restore value or restored value before all this stuff actually happened. Using this value, we will then find a difference between since usually this value is obviously going to be bigger than this value. I'm going to make this value the total of this value is here. Say this value is x, this will be also x. Find a subtraction. Then you take this and subtract it from this bigger value, and this will be a balance CD. If it's balance and restore, we first do the balancing by taking this as the value, and whatever value that comes out, we then put it back in. You put it here, and whatever value is here is your restored value. That's balance and then restore. Okay. Then we have is called the this is very important. I keep forgetting this one. Hold on, let me bring it up. This is our this is our day books. Okay, so we have day books, and this is your invoice statement. How an invoice works, it's the same thing as anything else. And in an invoice, there will be mentioning of a few criterias, which using basic general knowledge you already know. But the main thing you need to know is called day books, day books, day books, and most importantly, day books and from day books. What am I saying? You have to know purchase day books and sales day books. How they work is in a purchase day book, everything in details is related to purchases. Okay, you put the least price of per day, whatever you get. The trade discount is it's basically like the cash book. You know this basic cash book. It's exactly like the cash book, except it's just one side. Like you can imagine this whole thing like. Let's erase all of this. Bro, I'm actually gonna do it. Okay, let's erase all this. Okay, and erase this. And let the cash be like the net amount. Right. And what we're doing here is the same as any other thing. We just get the value. Alright. Oh, I actually missed something. There's a list price, right? I'm pretty sure. Yeah, there's list price. Okay. So your list price is the amount that is to be given. Say there's going to be multiple amounts in one day. You'll take the addition of that amount, what amount you get. If that percentage off, you'll find that percentage off using the same method. Let's say this is x, xxx. You'll find say 25% of it. So you find 25% of xxx, and whatever you, and let's say this is equals to y, and we'll put y here. Okay, y is already put right. Okay, and then you'll take y and subtract it from this triple x, and that is your net amount. And that's pretty much what that is about. If you are a bit confused, I'm giving you this exercises as well, which is 14.3, and from here is 13.3a. Okay, so that's that. That's pretty much all we have in this whole thing. Oh yeah, just ledgers. Now what ledgers are is depending on whether it's a purchase or sales ledger. Okay, so let's see, a purchase usually is not usually, it's always going to be on the credit side if it's a purchase ledger, a purchase day book with a purchase ledger. In a ledger, you just put the info and the amount. You don't have to do anything else. Okay, there's also a general ledger, but we'll get to that later. Then there's a sales ledger, which is the opposite, where we put it in the debit side rather than the credit side. So this is going to be the sales ledger, and you put date and stuff. You take the details, you put the amount, and that's pretty much it for ledger. And that's all actually for what we have. If you're a bit confused, again, it makes sense because I zoomed through everything as fast as I can. But you just need to know all the formats, okay? So all you know to know all the formats and how they work and how the discount amount. And I think this discount amount stuff should be easy for you to understand. And There's sales ledgers. Ledgers are just sort of like mini T accounts, but you don't have to do anything about them. You just put in a purchase ledger, it's all going to be credit side, and in a sales ledger, it's all going to be the debit side. I will talk about the other topics in a separate video, and that's pretty much it. Sorry for the minor inconvenience. If you're wondering why that video was over almost an hour long, that video I actually did the entire exercise of 12.4a, and if you're wondering why I'm not going to do it again, bro, I'm not going to go through all of that just to have the same thing be written all over again. Oh yeah, there's also contra. Shit, I should have explained contra. Okay, so what contra is in a cash book, a contra is basically say when it's like example we can say that we are taking cash from bank. So our bank value reduces, but our cash value increases. So our cash side, the debit side of our cash book, the cash part increases, and in our credit side, our bank value decreases. Okay, right? So we put both of them will have the same value. Just in debit side it's going to be cash, and in the credit side it's going to be a bank. All right, and in the details you want to put the opposite of what you put here. If say in the debit side you put cash, in the details you would put bank, and in the bank side in the details you put cash, and beside it you'll put this contra sign, a C with like a line through the middle, and that's pretty much it. There's nothing else I have to explain. I'll talk about bad debts and all the other parts later on. And that's it for today. See you later. Bye.